Investing is a need for most individuals if they hope to have a secure financial future. As proven by the coronavirus pandemic, a steady economy may be abruptly flipped on its head, leaving individuals who weren't prepared for harsh times scrambling for money. But what are the greatest investments for investors this year, given that the economy is suffering from high inflation? One option is to invest in a combination of safe and risky investments. Hey folks, what's up? This is Capital Finance again, your go-to channel for business ideas, entrepreneurship, investment, and personal finance. In this video, I will show you how you can quit your 9-to-5 job and make these 7 investments to live a comfortable lifestyle. If you're ready, then sit back, relax, like this video, and let's begin. But first, let's get back to the basics. It's possible that the word investment conjures up pictures of the frantic New York Stock Exchange, or that you assume it's reserved for those who are wealthier or older. But this, however, is entirely incorrect. As long as it is done wisely, investing is the finest method to increase your money, regardless of your age, salary, or occupation. However, these considerations will affect the most suitable investments for you at this specific time. If you are nearing retirement and have a sizable nest fund, you may have a totally different investing strategy than someone who is just starting their career. So now, let's take a look at these 7 investments you should make now. Number 1. Invest in high-yield savings accounts. Compared to a regular bank savings or checking account, you'll obtain a better rate of return from online savings and cash management accounts. As a result, cash management accounts mix savings and checking accounts. Brokerage businesses frequently offer these accounts, which may give interest rates comparable to savings accounts and provide access to funds in the form of debit or check cards or checks. The optimum use of a savings account is for short-term savings, such as an emergency or vacation fund. A savings account has a 6-transaction restriction each month. Cash management accounts provide you greater freedom and, in certain situations, higher interest rates than traditional savings accounts. In effect, you should retain between 3 and 6 months' worth of living costs in an account like this before putting more money into the investment items further down this list. Number 2. Invest in money market funds. Contrary to popular belief, money market mutual funds aren't the same as money market accounts, which are essentially the same as savings accounts at the bank. It's possible to acquire a collection of short-term government, bank, or corporate debt in a money market fund. This is a good investment if you have the money you may need in the near future and are ready to take on some additional market risk. Money market funds are also used by investors to keep a piece of their portfolio safe from the stock market or as a place to save money that they intend to invest in the future. Because they are technically an investment, money market funds don't have the larger returns or greater risk of the others. High-yield savings account rates are more like money market fund growth. Investing in money market mutual funds is easy and can be done through an online discount brokerage, a mutual fund company, or a bank. Number 3. Invest in corporate bonds. The sole difference between corporate and government bonds is that you're loaning money to a firm rather than the government when you buy a corporate bond. The government does not guarantee these loans, making them a riskier alternative. High-yield bonds, also known as junk bonds, on the other hand, have a risk or return profile that's closer to that of stocks than bonds, making them more volatile. As a result, this investment is best suited to investors ready to accept a higher level of risk in exchange for more significant returns. The larger the risk of a corporation going out of business, the higher the yield on a corporate bond. As a result, bonds issued by a large and well-established corporations tend to have lower interest rates. Investors are responsible for determining the optimal risk or reward ratio. Number 4. Invest in CD or certificates of deposit. CDs are federally insured savings accounts that provide a set interest rate for a predetermined time. CDs are for the money you know you'll need in the future, such as for a down payment on a house or a wedding. With terms ranging from 1 year to 5 years, CDs can help you safely develop your money for a specified purpose over a certain period of time. Because of this, one must keep in mind that if they want out of their CD early, they will most likely have to pay the price. Make sure you don't invest in CDs with money you may need in the near future, as with other investments. The best rates on certificates of deposit can be found through online banks and credit unions, so look no further if you're in the market for one. The finest CD rates may be obtained right now, depending on the length of the term and the minimum deposit. Number 5. Invest in mutual funds. To acquire stocks, bonds, or other assets, mutual funds aggregate investors' money. By distributing their money over numerous investments, mutual funds allow investors to protect themselves against losing a single investment at a low cost. Investing in mutual funds is an easy method to gain exposure to the stock market's higher investment returns without acquiring and maintaining a portfolio of individual equities is to invest in mutual funds while saving for retirement or another long-term goal. Some funds only invest in firms that meet specific requirements, such as biotech technology companies or enterprises that offer significant dividends. These are examples of such funds. As a result, you're able to narrow your investment focus. In addition to cheap brokerage services, mutual funds can be purchased directly from the fund managers. We found that nearly all of the mutual fund companies we investigated offered free mutual funds with no transaction fees, implying no commissions. In most cases, you must make an initial commitment of $500 or more to participate in a mutual fund. However, some providers may waive this requirement if you agree to make automatic monthly contributions. 6. Invest in index funds. A form of mutual fund, an index fund invests in the equities represented by a particular market index such as the S&P 500 or the Dow Jones Industrial Average. If you're looking for an actively managed mutual fund that employs an expert to handle its assets, this isn't the right choice for you. For long-term savings, index mutual funds are among the finest options. Index mutual funds are less volatile than actively managed funds because of the reduced fees charged by the fund managers. Young investors with a lengthy investment horizon may benefit most from index funds, since they can devote a more significant portion of their portfolio to higher-yielding stock funds rather than more conservative options like bonds. Early on, investing one's whole portfolio in stock funds can be a good idea for young investors who are emotionally strong enough to withstand market fluctuations. Investing in index funds can be done through a discount broker or directly through the fund issuer. See our Index Fund Investing Guide for more information. Regardless of age or income level, anyone may begin to accumulate money by making the investments we've just talked about. Here are some principles you follow in selecting the best investments. First, the timetable you've set for yourself. Near-term financial resources should be available and invested safely and securely. If you have long-term ambitions, you can invest in more volatile assets. Second, your ability to bear risk. The greater the potential long-term reward, the more risk you're ready to face by investing in the stock market's short-term fluctuations. Your investment results will be more stable if you diversify your portfolio. Third, your financial status. Some investments demand a certain amount of money be invested initially. However, some workarounds and suppliers can fit most investment budgets if you know where to search. Fourth, how much support do you require? Open a brokerage account and you'll have access to many of the assets listed above. For more information on brokerage accounts, go here. An automated service known as a robo-advisor can design an investment portfolio for you based on the criteria at an affordable fee if you're unsure which assets are appropriate for your scenario.
savings accounts, and other short-term investments can be created with a bank. It's possible to accumulate wealth over time through investing, and you can choose from a variety of asset classes, some of which have low risk and higher returns. To make an informed selection, you'll need to understand the advantages of each investment option and how they fit into your overall financial strategy. Initially, you can handle your own investments, even though they may appear overwhelming. So, which of these 7 investments seem appealing to you? Drop your thoughts in the comment section below. And that's it for this video. In case you found this topic interesting and useful, don't hesitate to hit the like button and subscribe to this channel while you're at it. It's always been a pleasure, folks. See you next time.